A very warm welcome to all of you. Today I'll be speaking about time of supply under Model GST law. This presentation has two parts. First I'll be talking about the goods and then about the services. Before we go into today's topic, let us find out what is a taxable event as on date. Excise duty is applicable on manufacturing, service tax is applicable on rendering of services, and VAT and CST is applicable on sale of goods, which largely involves transfer of property in goods. And what is it going to be under the Model GST? Supply has been defined under Section 3 of the draft CGST SGST Act 2016, which means and includes not only goods and services supplied for consideration, but also supplies as mentioned in Schedule 1 even without consideration. Imports, supplies between agents and principals, branded services provided by aggregators like Uber, Ola, Flipkart are all included in the definition of supply. It may be noted that the same is applicable to IGST Act 2016 also by Section 2F thereof. Now let us come to time of supply. Time of supply is important because supply is a taxable event. The event occurs at a precise time and triggers the provision for collection of levy, which is Section 7 under the Model GST Act. In the Model GST, we have got separate provisions for goods and services in Chapter 4. Section 12 deals with supply of goods and Section 13 and 14 deals with supply of services. Identical provisions are applicable to interstate transactions by virtue of Clause 27 of Chapter 9 of IGST. We will discuss the time of supply of goods as envisaged under the Model GST under 5 broad heads. Let us begin with normal goods. Subsection 2 of Section 12 tells us to find out whether the goods are required to be removed. If our answer is in the affirmative, then we have to consider the date of removal. Before we proceed further, let us analyze the meaning of the word removal, which has been defined under subsection 83 of Section 2. Removal means dispatch for delivery by the supplier or collection of goods by the recipient. In both cases, they can act on their own or through somebody else. It is safe to interpret that only physical transportation is contemplated in this case to the exclusion of all other modes of transportation. You may also ponder that for the purpose of taxing the supply, we are only interested in the commencement of the journey. The time of supply has nothing to do with the goods reaching its destination. One more point to note is the goods are required to be in a deliverable state. Any innocent movement of goods not specifically and purposefully supplied to the recipient will not be covered. Now that we know what is the meaning of the word removal, let us see what happens if the goods are not required to be removed, which happens if the goods are not capable of moving physically, or they have been supplied in an assembled or installed state, or if they have been supplied by the supplier to his agent or principal. In such case, date of making the goods available to the recipient is the date to be considered. By way of an explanation, it has been clarified that the date of making the goods available means placing the goods at the disposal of the recipient. Now, we proceed to compare this date with 3 more dates. They are date of receipt of payment, date of invoice, and the date of recording by recipient in his books. And we say that the earliest of these dates is the date of supply of normal goods. Let us now go through some notes and explanations on this subject. Firstly, when we talk of the date of receipt of payment, we have to take the earlier of the date of credit in bank or entry in the books of account. Secondly, if we say that date of receipt of payment or the date of invoice is earlier to the date of removal or placing the goods at the disposal of the recipient, then we are talking about an advance payment or an ad hoc bill. In such cases, the supply is deemed to be made to the extent covered by such invoice or payment. If you have a look at Section 23(1), you will find that issuing invoice is mandatory at the time of supply. Not issuing actually is an offense under Section 66, subsection 1. We have just learned that time of supply depends upon issue of invoice. There is obviously a very peculiar situation here which requires clarification. Last but not the least is the 4th date, which gives us a concept not encountered in our present tax system. All of us are wondering about the ways of finding out the date on which the recipient enters the transaction in his books of account on which we have no control. Actually, this date will be available in the return of inward supply, which is mandatory for the recipient to file every month. Let us now move on to discuss the next category of supply. Let us discuss the provisions of section 12 subsection 3, which deals with time of continuous supply of goods. Continuous supply has been defined under section 2 subsection 30. Government may also notify goods which are deemed to be continuously supplied. Two situations have been envisaged. The first situation is that if successive statements are issued or successive payments are involved. In such case, the earliest of the following dates have to be considered: date of expiry of the period to which such statements relate and date of expiry of the period to which such payments relate. Under the second situation, when no such statement of accounts has been received, we have to take the earliest date of the date of invoice or date of payment. It may be noted here that, like in other sections, the payments are not related to the receipt thereof in the bank. Time of supply of goods under reverse charge is dealt in section 12, subsection 5. According to this subsection, earliest of the following four events is deemed to be the date of supply. That is, date of receipt of supplier's invoice, date of receipt of goods, date of entry in the books of accounts, date of payment. It may be noted that the date of payment is deemed to be earlier of the date on which the account is debited in the bank or the date on which the same has been entered in the books of accounts. Now, let us talk about certain special kinds of supply. Under subsection 6 of section 12, it is provided that if the goods are removed before it is known whether supply will take place, then the time of supply shall be deemed to be the time when it becomes known that the supply has taken place, or 6 months from the date of removal, whichever is earlier. Here, removal is linked with the purpose of removal. The purpose should be of giving up control. Giving up of control should not be confused with giving up of ownership, as transfer of property is not one of the preconditions of supply. Subsection 7 of section 12 deals with residual supplies. It has been provided that where it is impossible to determine the time of supply, the date on which periodical return is supposed to be filed, or the date on which CGST or SGST has been paid, whichever is earlier, will be deemed to be the time of supply. In the previous portion of this video, we have been discussing about the time of supply of goods. Now, let us move on to the time of supply of services, which are dealt in 6 categories. To find out the term of normal supplies, we have to first find out whether the invoice has been issued within the prescribed period, which is going to be prescribed under the rules. If our answer is positive, then date of issue of invoice is to be considered. Otherwise, we have to consider the date of completion of service. We have to compare this date with the date of receipt of payment and the date of recording by the recipient in his books. The earliest of these 3 dates is the relevant date. Let us also note that the supply is deemed to be made to the extent covered by invoice or payment if we take into consideration the date of receipt of payment or the date of invoice as the relevant date. Further, only the above 3 events will determine the time of supply. The Act is not concerned with other factors like conduct of the party to determine whether the supply has actually taken place. Subsection 3 of section 13 deals with time of continuous supply. Continuous supply has been defined under subsection 31 of section 2. Government may also notify services which are deemed to be continuously supplied. 3 situations have been envisaged. If the due date is ascertainable from the contract, then the time of supply will be the due date of payment, whether or not invoice is issued or payment has been received. If, however, the due date is not ascertainable, then each time an invoice is issued or payment is received shall be the time of supply, whichever is earlier for each supply. Further, if payment is linked to completion of an event, then time of supply shall be the completion of such event. It may be noted that the payment is not linked to receipt thereof in the bank in this subsection. Section 13.5 deals with supplies subjected to reverse charge. the provision is similar to the provision of section 12(5), which deals with the time of supply of goods. The earliest of the 4 specified events is deemed as the time of supply of such services. Now, let us discuss about incomplete supplies. Subsection 6 of section 13 provides that if supply ceases before its completion, then supply is deemed to have been provided when it ceases. Residual supplies are covered in section 13 subsection 7. Where it is impossible to determine the time of supply, it is deemed that the date on which periodical returns is to be filed or the date on which CGST or SGST is paid, whichever is earlier, will be the date of supply. Section 14 deals with situations where there is a change in rate of tax. Depending upon whether the service has been provided before or after the date of change in tax rate, the time of supply will be determined. The provisions are not new to the fraternity, as the existing point of taxation rules provide similar criteria. It is pertinent to note that this section overrides the provisions of section 13. Wherever date of payment has to be considered for determining the time of supply, it has been provided that the date of entry in the books of accounts or the date of credit in the bank, whichever is earlier, should be deemed to be the date of payment. However, if the date of credit in bank account is after 4 working days of change in the tax rates, then date of entry in the books of accounts will not be considered at all. Subsection 1A of section 14 provides that if service has been provided before the change of rate, then supplier shall be liable for the new rate only if he has neither issued the invoice nor received the payment before the rate was changed. However, if he has either issued the invoice or received the payment before the tax rate was changed, then the old rate will be applicable to him. Subsection 1B of section 14 provides that if service has been provided after the change of rate, then supplier shall be liable for the old rate only if he has issued the invoice and also received the payment before the rate was changed. In other cases, he will be liable for the new rate. We have gone through the provisions of time of supply of both goods and services. What we have been discussing in this video is not yet the law of the land. In order to engage with stakeholders, government has made available the draft model laws on GST in the public domain on 14th June 2016. The link is also available online. Do provide your suggestions and comments on the model GST law to the government. Your suggestions will go a long way in making the law vibrant, taxpayer friendly, easy to administer, and free of litigations. Institute of Chartered Accountants of India has submitted final suggestions to the government on 10th August 2016. We will now discuss the suggestions pertaining to the present topic. Section 12 subsection 6 of the Act deals with goods sent for approval basis. Section 3 defines supply, but it is doubtful whether the definition covers these transactions. Careful wording of section 12 subsection 6 is required to avoid confusion. Liability to pay GST is on receipt of advances. It has been felt that the administrative hassles are not commensurate with the benefits to the government. The GST levied under section 7 appears to be suspended until the time of supply as defined in chapter 4. Whether the tax levied under section 7 is final or whether the levy is complete only at the time of supply as defined, clarification is required on this issue. The date on which the recipient shows the receipt in his books of account is not in the control of the supplier. This event should be resorted to only in exceptional circumstances. Time of supply of reverse charge. Clarity is required on the circumstances in which such reverse charge is applicable. Books of account has not been defined, though referred to in many sections. It is suggested that the said term be defined in the Act. Section 14 deals with time of supply in case of change of rate of tax. The Institute has sought clarifications regarding the time of supply of deemed services like works contract, etc. The provision that the new rate of tax is applicable just because the service provider has failed to raise an invoice and receive payments before the change in tax rates, though he rendered services before that date, seems to be contradictory to the settled legal position. Clarification is also requested on time of supply in case the same has been provided after the change in rate of tax. Thank you very much for going through this video. Your suggestions are most welcome. Do encourage by giving your positive vote and subscribe to the channel.